When you jump on a trade that had a good trend and suddenly it starts consolidating on you, then the price probably has low volume. And today we're going to talk about volume and how to identify the perfect way to use it. So, what is volume? It's the amount of money that's circulating in the market. The more people are participating and buying and selling, the more volume there will be. In other terms, when you buy some coins or some stocks, you participate in increasing the volume. So this is a good indication to know when is the best way to trade. Let's get on to the charts. I'll show you how to use it. All right, here we are on XRP, the crypto, on 1 hour time frame. And we have already set our volume indicator down there. If you want to add it to your charts, you can just go to the indicators menu and type volume. This is one of the indicators that's given by TradingView. So you can just add it to your favorites. And I basically always have it on my charts because it's a very nice indication of what the price is doing. So we have it there, and the way it works is that it's a diagram based on the colors. You can tell whether it's volume of sellers or volume of buyers. If it's red, obviously this is the sellers, and if it's green, it's the buyers. So the volume is the amount of money that's going into the market. And when we see a move that's very strong, usually there needs to be a lot of people buying or selling to make the market move. And that's when you want to trade. So volume is always calculated on each candle. And that's a good way to also spot reversals. As we can see, this candle here, which has a wick, has a lot of volume because there's probably a lot of people who sold at first and then it went all the way down to here. And it reached a little area of support probably, and that's when people bought it back. So we can see that there's also volume coming in both ways, and the power of the buyers put the price back up to there. And then we also have another big candle here with a lot of volume, where the volume is going even higher. And that's explaining also why there is a wick. It's the same principle. There's a lot of people who sold and then a lot of people who bought. Now, every time there is a big spike like that in volume, this means that this could be the end of the trend. Because as we can see here with a big wick and a lot of volume, it means that there's a strong buying pressure. If there was a wick all the way to there and with a lot of volume, then it would be a different story. If that would be the case, it would mean that the market has a lot of people selling and a lot of momentum. So you can use volume to know the strength or the weakness of the market. And here we have another little candle here with a lot of volume, and the volume is decreasing then. So that means that this trend is dying. And as we can see here, it's going down while the trend is starting to slow down. And as long as the volume was going up like this with higher volume, well, there's a bit of spikes, but you can see that the overall trend of the volume here is pretty much going up. That means that the volume shows that the trend is pretty steady. Now we have the same thing with the bullish candles, and here we see another very big green volume candle, and that's coinciding with this one, which means that a lot of people are buying now. And we have another one which confirms that the trend is probably changing because there is this big bullish candle and at the same time a lot of volume. So that means that we have here reached an area of support, and adding to the big wicks that we had in here and in here, it means every time the price tried to go down, the people bought it back. And then we have a first try to go through. We get pushed back a little, and once we touch that support again, we have this big wick. And here it's the other thing that's an inverted hammer, and this might be a news or something like this, but still it's a very good price action showing that okay, there was a lot of people buying, and then it got all the way down back. Probably if we would zoom in the 15 minutes, we would see some kind of spike up and down. So that's probably news. Anyway, there is some volume here. You can see a lot of red here, and that's because on that candle, a lot of people bought and sold at the same time. And this paired to that support area that we have identified is a very good confirmation. We have this good candlestick, the bullish candlestick, and we could just target, for example, the lows here, which would be a quite nice trade. So that's how to use volume in a way to confirm your entries. Of course, as always, you can't just enter solely on volume. But the other thing that I was explaining is the chart patterns and candlestick patterns. So that's also a very good way to pair the volumes with these. And for example, we can see always try to identify when is the volume going up, and then the phases where it's going down. It's quite important. We see here on this phase it's going up, and after it reaches here, it's starting to slow down, and that is also a bit of the end of that trend, because then we just don't go higher than this top, and we start to have volume going up. Here the volume is going up and higher, but the trend is changing. So now the volume means that we are entering a downtrend, and we can then see that as well happening. Again, there is another huge candle here with a lot of volume, so that's typically very bullish, and another one here. Although for crypto, it's always a bit tricky. As you can see, that tends to be these big impulsive moves with a lot of volume, and then just die back right away. So so that's why it's not only a signal. Another thing to notice is that if we put on the sessions, so in here, let me just zoom in a bit. Each session is paired here. We have the Asian session in blue, and then London session, followed by mixed, where there is London and New York, and finally New York. And you can see that the volume is quite different based on the session that you're trading. Usually during the night between the end of New York and the Asian session, there is very low volume. And what that means for the market is that usually there's less volatility when there is low volume. And same here, we can see in the Asian session for at least the first half of it, there's very low volume, and the price is very often just consolidating and not doing much. Although, yeah, there is, of course, sometimes a bit before the sessions, some movement. And for crypto, it's especially interesting to look at volume, because there's also weekend that you can trade. And on the weekend, the banks and the institutions are not there to trade. So you have typically only retail traders. And as you can see here, there's almost zero volume. And what that does is that usually the price will just consolidate and not do much during weekends. And as you can see, as soon as the Asian session starts, and especially the London, you start to have a lot of volumes and those big moves. So that's usually the case for weekends. If we go here, exactly the same, low volume, not much happening on the market. So that's also something to keep in mind. Don't really bother trading when you see there's very low volume compared to the rest of the chart. If you look at here, there's relatively high volume, and then we see here it's just flat and completely dead. So that's when you want to avoid trading. Same for night. Usually between the New York session and the Asian session, not much is going on the market. And you can see that especially better with Forex. If we go to any Forex pair like Euro British Pound, we can see usually very easily. Let me just clean the chart. We can see that during the Asian session, the price tends to just consolidate. And during the night, there's literally nothing, no volume at all whatsoever. So those are usually the times that you don't want to trade. I'm also cautious if you're trading European pairs, for example, this Euro British Pound. Of course, the New York session is less traded as well, and you have much more volume during the London session and the mixed, because, of course, the Paris and London stock exchanges are opened. And for the Asian session, if you're trading the GPY pairs, then it's more moving towards that area in the blue. So that's also something to keep in mind. According to the assets you're trading, you need to pay attention to what time there is volume. And that's going to help you to not get caught up in this kind of rangy market, because that's just going to chop you off like this. If you try to buy and sell like here, it's going to be very tricky. So I wouldn't recommend it when you see there's low volume. So that's it for today's video. If you have any comments and questions, you can share them below. I'll make sure to answer. Don't forget to subscribe to the channel if you liked it, and I'll see you in the next one.